Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Tuesday, August 26th, 2014. Hope you're having a good week. Obviously, we were expecting some pretty dull action on this last week of August, last week of the summer, 1 week between the middle 2 weeks of August and Labor Day. I've been pointing out for a couple weeks here that the calendar this year was a little awkward. Usually you have 2 weeks between the middle 2 weeks of August when most people take their vacations and then Labor Day. This year, unfortunately, we only have one. So this is that week. I'm not sure that didn't think that was going to bring the big players back, and it hasn't apparently based on the volume. We'll take a look at that in a moment. They weren't here on Monday. Probably means they won't be here on Tuesday, but that'll be our last chance. If we don't see some volume by Tuesday, unlikely they'd come back just for Wednesday. By Thursday afternoon, everybody's heading out for the long weekend. Friday, no one's going to be here. Not only is it still a summer Friday leading into a 3-day weekend, but it's also the end of the month, which means everybody's going to want to leave the stocks right where they are for end-of-month window dressing purposes. So this does not bode well. This is also the first full trading day of the year that I did not run a single stock or futures trade in the markets because things were so light by just before the first hour was even complete. You could tell how bad the volume was going to be, and that's just not what I do. As I always say, I'm not here to trade. I'm here to make money, and there's a big difference. And when you're trading in a hazardous, low volume environment, too heavily, anyways, you're certainly asking for trouble. There were a couple of trades that I would have taken today had they triggered, but none of them did. And frankly, that's not shocking given the environment. So here's a look at the ES futures contract. This is the front month contract. You can see basically a little gap up today, and that was about it. We'll look at that a little more closely when we look at the intraday action. So here's the S&P 500, so it closed up 9, but remember, most of that was a gap. The NDX closed up 14. That was actually down from the open. It gapped up even more than that. So the actual trading was not a gain of 9 points and a gain of 14 on the NDX, as you'll see. On the other slide, here's a look at the stocks, down 2 for the week, or for the day, sorry, and the biotechs were actually up quite a bit. Nice cup and handle here on the bios. When we get back to work in September, depending on if the overall market heads up or not, there should be some action in the biotech stocks, which is great. We love to trade them and start to see some activity. But of course, we don't know yet what the market's going to give us once we come back. Volume starts to pick up like normal, with the market kind of extended here at the upside after what's gone on this month. Here's a look at volume, just so you know. It did drop off. Friday's was the worst full day of the year so far at only 1.2 billion. But today's volume at 1.28 is the second worst. You don't count the day before 4th of July, which was a half day. And so today's volume, Monday, the 25th, was actually worse than last Thursday, which was a big drop-off. Last Thursday was the first real day that we really broke under the 1.4 billion shares a day. So we went from 1.4, just barely closed under it Wednesday, definitely dropped off to 1.3 or so on Thursday, dropped down to 1.2 on Friday, and of course that's a summer Friday, so of course people are away. And then a little bounce back here on Monday, but nothing even near, didn't even get back to the 1.4 billion. So that kind of is your proof right there that they didn't come back. Summer vacations are still going on. Everybody's looking at that Labor Day weekend thinking, why am I going to do this? And that means the big players are not in the market. A couple of stocks, just some of our bigger traders we can take a look at here. Google lost 2 points for the session, sitting right on its 10-day moving average. There is a nice cup and handle for me on Google, however. Here's a look at Apple, up 22 cents for the day. Remember, this was a big weekly chart breakout from last week that didn't do anything for 3 days. Finally gapped up a little today. Note the high today is exactly the risk line of the 13 seeker sell signal that's right there from last Thursday or Wednesday on Apple. Quick look at crude oil. Just to see what oil prices are doing at this time of year where usually they're on the run to the upside, and here they are back down to 93. This bodes well, although it may not bode well for the economy. It bodes well for oil prices really having a chance to come back because October and November typically see a pullback in oil, so that'll be interesting. Now let's take a look at the intraday action here on the markets. I'm going to go to the ES futures contract. This is of course, the current contract. So what you can see here is Friday's close, then we gap up. And this is the important part. It's not where you are for the day compared to Friday's close because most of that was a gap. Okay, we didn't trade up through this whole price. If we had, it actually would have been decent range for the day. But instead, we gapped up. And what's interesting is once we started to push a little higher, and then we kind of flattened out. We came back in the middle of lunch towards where we opened. But then look at the activity after lunch. Nothing at all. Volume did not come back. There was a big bar right at the close, but that's normal. Some fun buying just to end the day out. And it really didn't do anything anyways. But look where we spent most of the afternoon. The purple line is the VWAP, and the red line right underneath it is the midpoint of the day. The red line underneath that is the opening price. That was the first print of the day. Those levels get bunched together. And, keep in mind, as I said in the room today, you can go flat anywhere, right? Technically speaking, the market could gap up, run a little bit, and then go flat. Why is it that it gets drawn on the low volume days so specifically to that VWAP midpoint area? Because there's just not enough activity, and that's sort of the median of what's going on. There's not enough buyers or sellers either way to push the market away from that early established middle activity, essentially. And that's what happens. You get stuck in the afternoon going nowhere, and you try to trade too much of that, and you get chopped up, and you lose some money. So we don't do that here at Tradesight. That's going to be about it. Again, tomorrow we do have a couple of data points I can point you to. Nothing huge. We've got durable orders an hour before the bell. We've got two housing numbers. We've got Case-Shiller 20-City Index and the FHFA Housing Price Index at 9 a.m., which is still half an hour before the open. Maybe the bigger number is 30 minutes into the market at 10 a.m., consumer confidence. But let's watch those volume numbers, of course, as we are trading. And again, we always look at the 30-minute mark and the 60-minute mark for what volume number we're getting to give us an idea of how bad or good the day is going to be. And here's a look at NASDAQ volume. And at 30 minutes today, it was 180 million shares. That's horrible. And after an hour, it was at, I'm just looking at the number here on the screen, after an hour, it's 304. Okay. And that's not much better than Friday, which was 155, record low for the year after 30 minutes, and only 276 after an hour. Okay, so you start getting those numbers where after an hour you're only just around or maybe even just barely above 300 million on the NASDAQ, and there is nobody trading. That's just the bottom line. All right, have a great session, and we will see you guys in the lab. If you need any help, try to find something early, and if not, keep enjoying the week until we get back to work next week.